Hey, what's going on, everyone? Back again here with the stock portfolio, nearing that $23,000 mark. And today I'm just going to be buying a few stocks that just announced their earnings for the quarter, and we'll go over it and why I like these particular stocks. So as always, if you guys have any stocks you guys want me to look at, be sure to let me know in the comments. So let's get into the portfolio here. I'm up about $30 for today, so very insignificant. Dow is barely up, or actually is down a little bit last I checked, and yeah, not much going on in the markets today. So let's get into the first here. That would be Applied Materials. Now, they had a great earnings report that they announced on Wednesday for Q1, and they absolutely smashed expectations here. As you guys can see, their expected earnings per share and their actual earnings per share. And for those who don't know what Applied Materials is, I'll give you a quick synopsis. Basically, they are the ones who provide the raw materials, software, and services to semiconductor manufacturing companies throughout various times in the past 3 years. Actually, Samsung and Intel were one of their major customers who made up more than 10% of its sales. So AMAT has consistently outperformed the S&P 500. A $100 investment from 2014 to 2019 would have netted you about $288 with AMAT, but if you had invested just in the S&P 500 with an index fund, say VU, that would only be $167, which is still pretty good. And artificial intelligence and big data, that era is not the future. It's already here, and it's going to explode in this next coming decade. Picture big growth with companies like this. The new 5G can handle up to 10 times as much data rates as old 4G networks. That's going to leave a lot of companies scrambling to buy more of AMAT's equipment to make chips that can handle these powerful upgrades. Applied Materials' total revenues increased 11% year over year to $4.16 billion this quarter, and operating cash flow was under just $1 billion. Also, the company returned almost $400 million to shareholders via stock buybacks and dividends. The company management says that they expect double-digit growth in semiconductors as they have artificial intelligence, the Internet of Things, autonomous vehicles, and big data that can all be beneficiaries for the company over the next coming decade. All these fields will experience strong semiconductor demands for memory, storage, and network services. Just think, as we continue to go on with our daily lives, technology will be constantly evolving, most likely making our lives easier, and we can profit from it because technology likely needs microchips in order to operate. Applied Materials is definitely a stock I want to add more to. It has a forward PE of just 14. Now, it does pay a very small dividend, but its dividend yield is just 1.28%. But let's face it, we're not buying this stock for the dividend. There's already plenty of stocks in my portfolio that do that. I'm looking for more capital appreciation with this stock. So I already own 9 shares and I'm up over $100 already. And this is one I'll be buying continuously for the future. So let's just buy 2 shares for today. Right now it's trading at $66.96. So we'll just put that amount. And there we go. Let's see if it actually went through. Not yet, but I'm sure it will go through eventually. All right, before we move on to the next stock, guys, make sure you don't miss this opportunity to join the community and subscribe to the channel, as well as hit that like button, as it really helps small-time YouTubers like me out. Also, let me know if you're investing in any semiconductor companies, because the very next one we have is Nvidia here at $290. People were shocked that their earnings report was so good, but not me, as I was expecting an impressive earnings report from this technology company. Their data center sales were nearly $1 billion, easily obliterating Wall Street's estimates of $825 million by 17%. Nvidia had a brutal 2018 when the company was recovering from the cryptocurrency crash. You know, when mostly everybody realized that crypto is just a Ponzi scheme. Oh, okay, I'm just kidding, but kind of. Anyway, Nvidia products were very useful in the mining of crypto. Their CEO has said that new breakthroughs are coming in artificial intelligence, which can be sold to many different industries. Their artificial intelligence can help in language understanding, conversation, search engine recommendations, which are the core of algorithms that are used to power up the internet today. Plus, Nvidia applications are also working for 5G and autonomous vehicles. I mean, think about all those future Teslas that people are envisioning that are going to be sold, and a piece of Nvidia technology will be equipped with all those cars with very high performance supercomputing. And just when you thought this company couldn't possibly do more, Nvidia is also a huge player in the ever-growing gaming market, which saw an increase in that sector as well. That was mainly due to China's Singles Day shopping spree. So check out my earlier video on Singles Day if you're unfamiliar with what that is. However, Nvidia did trim its revenue outlook for the current quarter by $100 million, and that was to account for the outbreak in China that's currently going on. The Nvidia RTX ray tracing is reinventing computer graphics and opening up new opportunities for cloud gaming. Nvidia now has over 120 different gaming laptop models. There's so much going on here with this company, and it's doing so much across all these different sectors, including data centers and assisting with powerful supercomputers. It seems like all the new revolutionary technology that's going to come throughout this decade, Nvidia has a hand in it. I can easily see the stock more than doubling in market cap in the very short run. So let's just buy one share for now. I'll obviously be dollar cost averaging as time progresses. And I know it's been up a lot recently with its phenomenal earnings report, but I just want to get into the stock because I know if I waited for the right opportunity, that probably won't ever come and I probably wouldn't ever execute it. Okay, and then the last stock we're going to buy today is none other than Pepsi. For all these stocks that are facing new highs and overvaluations, Pepsi is one that can definitely weather a recession. Go into a Walmart and it feels like half of the items on the shelves are Pepsi products. Pepsi is sold at every corner of the globe, in vending machines, gas stations, airports, you name it. Pepsi has had some special income tax breaks in the amount of almost $5 billion that they were able to take advantage of in 2018. And they obviously can't take advantage of that again in 2019. So their earnings might look a bit worse than they actually were year over year. Even though Pepsi products are more on the boring side, its acquisitions and capital expenditures are actually up. It plans to spend $5 billion this year on capital expenditures and another $6 billion in free cash flow for shareholders in the form of either dividends or share buybacks. And they actually just increased their dividend for the 48th straight year, which means they're now only 2 years away from being dividend kings, which would be 50 straight years of increased dividends. So their 7% hike on their dividend means that you now get $4.09 in income per share of Pepsi, which is up from $3.82 per a share. Plus, they also sponsored the Super Bowl halftime show. I'm sure that just makes you want to reach for a Diet Pepsi. I personally don't drink soda, so I'll stick to my Doritos instead, which they also are the makers of. Pepsi and its food beverages should be a sustainable business model. Basically, all classes, rich, poor, middle class, they can all afford their products. There's certainly something different when buying a food or drink product than, say, a new couch or a brand new computer. We kind of always need to be eating or drinking something that's probably not going to change anytime in the future. That's why I think their business model is so sustainable. So let's just buy one share of Pepsi here. And right now it's trading at $146.83. And I'll just put it for it today. And we only just need one share to practice dollar cost averaging. And this will eventually be put into order here. So there it is. Now I own 5 shares. And I will now continue to be getting paid dividends as long as the company is profitable and doing well here. I actually got in on Pepsi, my very first order was for like $96. So I'm getting close to almost a 5% yield on cost with that particular share. And as you guys can see, my dividends just throughout time have slowly increased. I also wanted to give a shout out to 3M, as this company increased its dividend for the 62nd straight year, and it's trading at a very fair valuation in my opinion. The dividend hike was only for 2%. That's fine with me, because I feel like we're starting to get spoiled by a lot of these companies that raise its dividend every year by like 15%. And we need to understand that that's not exactly normal. Not every company can just grow like that. So 3M's yield today is about 3.7%, and that is a phenomenal starting yield. We don't need conglomerate companies like 3M to be yielding as if they were a REIT or energy sector type of stock, where more of the emphasis is placed on the dividends in terms of value to shareholders. But here, 3M, I want it to be going up in terms of capital appreciation. All right, guys, that's going to do it for today's video. Be sure to hit that subscribe button and let me know in the comments what you're thinking. Just added a few stocks here from a few different sectors, and I'll be putting out new videos every week, so be sure to stay tuned for that.